Stock markets on both sides of the border saw steep declines again today. In New York, the Dow, the Nasdaq, and the S&P 500 each saw sell-offs. For more on this, I want to bring in Christina Partsinevelos. She's the Nasdaq reporter with CNBC, and she joins us live in New York. So, Christina, just how bad was it on the markets today?
Well, bad enough that on CNBC we had a red banner saying markets sell off the entire day, and I admittedly wore red, but the Nasdaq was down 4%, the S&P down about 2.7%, and the Dow closing 2% lower, and much of that selling was just across the board. Individual names, Apple falling 5%. I mention Apple because it has the biggest point impact on the NASDAQ 100 where I am right now, followed by NVIDIA. Tesla, another name, falling 15% today. Its worst day since September 2020. Tech overall down from its peak in December, about 14%. And then lastly, just really if we look at the NASDAQ 100, which is just the biggest 100 firms traded at the NASDAQ, you're seeing just a drop. You can compare it to COVID, for example. During COVID, those stocks fell about 13% from mid-February to March. Right now, we're at down 12% during that same time frame. So we are seeing quite a sell-off in such a short amount of time.
Yeah, we sure are. And so what's spooking investors right now?
You do have a lot of people admittedly coming on CNBC saying there's recession fears because there's been a few underwhelming, I guess, economic data numbers. But there's also the whipsaw of tariff announcements coming from the Trump administration. And that only intensified today because President Trump gave this kind of demurred outlook for the U.S. economy in an interview with Fox Business's Maria Bartiromo, saying that he was asked about a recession if it was going to happen this year, and he said that he hates to predict things like that. So I think what is that telling everyone here in the U.S. is that Trump may not step in to help the market when it falls. Previously, in his last term, when he was president of the United States, he was all about the markets, and he was responsible for such a big boom. Whereas this time around, it seems like Trump may not be that support for the markets, and that added further volatility today, along with the tariffs. But we've known about the tariffs actually for over a month, so it's a little bit less that and more this volatility from Trump. And then also market concentration. So many people have been in tech stocks, the Mag 7, NVIDIA, for example, for so long. And all of that money was funneled into just a few names. And so you're starting to see that unwind of those positions.
So it's been quite the stretch of wild swings on the market. So is this market uncertainty going to persist as long as Donald Trump keeps up with his tariff threats?
Well, yeah. Right? Mm-hmm. Definitely, because you don't know what that means for consumers, businesses. It makes it really difficult for smaller businesses to plan anything when, there's going to be a tariff. Oh, no, I'm pulling back from the tariff. And so that's just back and forth where you're just unaware or uncertain about how things are going to go. And so that's reflected in a lot of the stock movements, especially for larger corporations that start hiking prices because they believe that, inputs here in the U.S., steel, et cetera, everything's going to become more expensive for them. So they start hiking prices, and then that gets passed on to consumers. The only positive is if you're a trader, this is a great opportunity for you because there's volatility. So you can really benefit from that cycle.
Christina, thank you. Christina Partsinevelos is the NASDAQ reporter with CNBC.